Hello, welcome back to another video. In this video, we will talk about the accounting, basics of the accounting, that how we identify that which account should be debited and which account should be credited. So it is very difficult to identify that which account should be credited and which should be debited. So first of all, we'll tell you about the natures of account. The first nature, if we talk about, is asset, liability, owner's equity. Then if we talk about is expense, then drawing, and then revenue. Normally, if we talk about debit, is what comes in, and if we talk about the credit, is what goes out. So this is the debit and this is credit if we talk in general terms, but it is very difficult to identify for the beginners that which account should be debited and which account should be credited. So here I will mention some of the tricks. This is what you call is T account. This side always gets debit and this side always gets credit. And this is known as T account, and we write here the nature of account. Is it the asset or the revenue or the expense or the drawing account, whichever is we mention out here. Here we will write asset. Here we write drawing, and here we write expense. Here we write a liability. Here we write owner's equity and revenue. Now we will identify that which account should be debited and which should be credited. If we talk about the debit side, whenever there is increase in the debit side, whenever there is increase in the asset, whenever there is increase in drawing, and whenever there is increase in expense. Increase in debit side always gets debited. So whenever there is increase in asset account, whenever there is increase in drawing account, or whenever there is increase in expense account, it will always be debited. So if we talk about the other side, whenever there is increase in liability, whenever there is the case in which the owner's equity increases, and whenever there is a case in which revenue increases, it will always be credited. Increase in credit side is always credited. Means whenever there is increase in the credit side, like if increase in liability, increase in owner's equity, or increase in revenue, it will always be credited. Now let us talk about whenever there is fall on the debit side, or whenever there is a fall on the credit side. Whenever there is a decrease in debit side, decrease in asset, decrease in drawing, or decrease in expense, it will always gets credited. On the other hand, whenever there is a decrease in the credit side, decrease in liability, decrease in owner's equity, or decrease in revenue, decrease in credit side, it will always be debited. All these concepts, all these logics that we have explained out here, we will identify this with the help of an example. Here, purchase goods with cash 50,000 rupees. Assume that we have purchased goods for the business for having cash 50,000 rupees. Whenever there are the purchases are when inventory comes in the business, and when the inventory comes in the business, it will always be debited because the asset, if we write here, inventory increase, inventory is an asset, asset increase, and inventory accounts debit. On the other hand, if we talk about the cash is decreasing. Cash is an asset, though it is a current asset, but we will not justify here which it is, either it's a current asset or the non-current asset. And when the asset decreases, the cash account gets credited. So the ultimate result out here will be inventory account to cash account 50,000. That will be the entry that we will go post. Now here we will see a few of more examples just to make sure that our logic that we have written before is an authentic or not. So here, paid salary ₹5,000 to laborers. What is the nature of salary? It is an expense, and expense is increasing. Whenever there is increase in expense, it will be debited, as we mentioned earlier. And on the other hand, there is a cash involved. Cash is decreasing because obviously we are paying cash, and whenever there is decrease in asset, because cash is an asset, it will always be credited. So the ultimate result of the entry will be salary expense account to cash account 5,000. This is basically the entry. Now let us post another entry here. That is the last entry of today's lecture. Hope you will understand the logics behind these all concepts. Sale of goods, costing 2,000 rupees on credit. Basically, we sold goods on credit. Credit means on loan based. It is basically a future payment. So here we will write when we sell something on credit, we will always call that person a debtor. And let us suppose that we mention debtor Ali, his name. Debtors are the person who has to pay us. So our receivables basically. And receivables are assets. And there is increase in receivables, so means that there is increase in asset. So whenever there is increase in debtor Ali account, 2000 rupees to sale. On the other hand, we are selling good. We are carrying out sale. So sale generates revenue. And this revenue is 2000 rupees. And the nature of revenue account, that revenue account is increasing, it comes on the credit side. And whenever there is increase in credit side, it will always be credited. So sales account is also increasing, but it is on the credit side, so it will be credited. So sale account, here we write 2000 rupees. That was basically the two entries that we carried out here in today's lecture. Hope you have understood this lecture clearly. If you like my video, kindly give it thumbs up, kindly subscribe to my channel and press the bell icon for the more upcoming videos. Have a good day.